JC put this chart together here that is a pretty compelling argument to the idea that US home prices increase an average of 7.2% in election years, right? So you went to back to 1984. After 1984, the home price appreciation ended up being 1.6%. 88 was 11.7%. 92 was 2.5%. 2000 was 4.3%. August 2008, we know what happened there. The Great Recession happened, and that's the first time it went negative. August 2016, 5.6%. And August 2020, post-pandemic, 25.3%, a little bit of an outlier there. Anything that you want to point out in this chart, GC?
Yeah, I like the fact that there are what I would call two outliers there.
Yeah.
And to me, I don't know if they balance each other out or whatnot, but it's good to have two. It's good to have a negative outlier being what happened during the Great Recession. And the fact that real estate caused that recession makes sense as to why real estate values would have gone down there. And then, the COVID effect of 2020 to 2021, obviously unprecedented as what that has done as far as real estate price appreciation in Jacksonville and across the US. So the bottom line here is take the high outlier and the low outlier out of the equation. And what you find here is incredible consistency. You see growth happening from this time, which I just chose August because we're on the doorstep of August, to a year later. It largely performs just like real estate performs in non-election years.
Right, because 2000 to 2008, we had the same president. There was an election year somewhere in there, but we all know that the market was super hot in 2004, right? So that would probably drive up the average,
Well, actually, I did include 2004 and 2012 here, but I had to fit it all on one slide. So I cut out the years that weren't noteworthy. So I think the returns were, the appreciation was somewhere around 3 to 5% for those other years.
Cool. Yeah. So interesting, right? So, you're highlighting these like regime change years, which if, sensibly that is the most chaos, most uncertainty when something's changing over as opposed to, hey, everything's good and the incumbent's going to win. We obviously have no idea what's going to happen in this election, especially given the last 10 days. But I like looking at this thing. I look at these outliers. That 25.3 tells me it probably pulls things up pretty good. And that 6.3 negative probably pulls things down pretty good. It feels, if I was to say this like 7.2% average, I think visually I'd probably feel more comfortable thinking visually I would see like a 5%, 5.5%, but that's still above the average US home price appreciation historically and right on line with average Jacksonville home price appreciation, right?
Exactly. US home price appreciation year over year on average is right around 4.5% year over year. And Jacksonville is 4.9%. So yeah, you take those two out, you're probably somewhere around 5%. And that just reinforces this point that real estate continues to chug along. And for some reason, people want to make it act or want to think like it acts like other asset classes, but it doesn't. It's always interesting that this asset class, real estate, tends to get the sensational headlines of waiting for the next crash when crashes just don't typically happen here, as the data supports.
Yeah, and as we always talk about, right? Some people talk about how liquidity is the reason why they're not in real estate, but in reality, liquidity is the reason why you are in real estate, right? Because it smooths out. We talk about cycles in other ways, and a cycle means it's like super high up and a super low down and a super high up and a super low down. When in real estate, it's really more like a step ladder up of, like increasing slope, decreasing slope, but still going upwards, increasing slope change, decreasing slope change, going upwards. It's calculus, no big deal. But it's, cycle isn't really apt to talk about the highs and lows. The lows in real estate happen just kind of situationally when something happens in a property and you're like, oh, okay, well, I got to cut a check. But if you can really look at the asset as, well, how has it performed up until now? You see that you've been largely winning, and you'd be a fool not to sign up for the next like round of winning before the next thing happens because someone lives in your house, right?
You just have the answers to the test. You don't have to be a genius to figure this out, right? You understand the asset. People need shelter. They want to pay rent. And we understand that over time, real estate tends to grow. And so as long as you can be in the game long enough, which is dependent on your experience and enjoyment, which is about having that team to support you, as long as you're in the game long enough, it's hard to lose when you own real estate.
Especially in a critical need, right? So, which is the workforce housing stock that JWB offers, right? So We also know real estate is a local game, right? So GC did his usual good boy homework, and he put together the local statistics here, right? So it shows once again, Jacksonville home prices have increased an average of 7.8% in election years since 2004. In 2004, it was 19%. 2008 went down 18%, 19%. We know the Great Recession happened. Then 2012 was up 19%. August 2016 was up 5%. August 2020 up 15%. So like even when we zoom into the local economy, Jacksonville has performed that same way. Anything you want to say about it here, G?
Yeah, it reinforces the same thing that we're talking about on the national level, we're talking about on the local level here. I want to point out that, I mean, these appreciation numbers are really high, right? Like 19% appreciation from August 2004 to August 2005, down 19% in the Great Recession from August to August, up 19% from 2012 to 2013, and then in 2020, up 15%. I happened to choose a date in August to August.
Mm-hmm.
And, I'm doing that because that's what is required for this show right now. You can have large swings when you go from month to month, right? So you could have a slower growth month in July, and then you could have a huge uptick in August or vice versa. And so it can be swayed. I don't want people to think that 19% year over year is normal, or even that we had 19% appreciation from 2004 to 2005. But because we're talking about a decision that you can make today, that's why the data is what it is. So just to give some perspective, again, the normal home price appreciation in Jacksonville is about 4.9% per year. I don't have what it was right off the bat from 2004 to 2005 year over year, but it wasn't 19%. The one where it really was in the 20% range was 2020 to 2021. The other
Mm-hmm.
ones just happened to be what that month was because of the data that we needed to support today. Did that make sense, Pablo?
Yeah, that makes a lot of sense, man. You're tempering expectations. This is what you do. You're the turtle, right? Like you're tempering expectations. What's funny for me is I know this, right? I know not to expect more than like 5% home price appreciation over the life of it. And yet, when I look at these numbers, which look astronomical, like cartoonish, I just think of the 10 years I was in Miami, reading every single headline about how Jacksonville is one of the fastest growing cities in America and one of the best places to live in America that I've been reading since consistently since like 2012, 2011. And I'm not surprised to see these numbers. And then I moved to Jacksonville 5 years ago and I realize why this place is that. And then COVID happens and it accelerates all these other trends of everybody understanding that they can live in a place like Jacksonville. And Jacksonville is still like the only the underpriced city in Florida where you have like the hedge for risk of a city, but you also have all the tailwinds of Florida. So I don't know, man. So for me, the eye test of looking at this thing and being like, yep, no, no, checks out for me, right? I wouldn't have thought that you had to temper it. And it really has been like feeling it that high and these like big bumps.
Yeah, what you should take from this data is that there's certainly not variability here, right? There happens to be one year, which was the Great Recession, which was an outlier, but you've seen it now from the US perspective. Overall, home prices have gone up every other year. You've now seen it from the Jacksonville perspective. Every election year, home prices have gone up. Don't get so excited that it's 7.8% in those month to month that I happen to choose versus overall it's 4.9%. That really doesn't matter. But use this information to your advantage to get over the hump of how costly inactivity is.
Yeah.
Because if you take 5% appreciation or 8% home price appreciation and you multiply it times what market values are today, you're potentially leaving $20,000, $30,000 on the table. Thank you for bringing that slide up just in the nick of time, Pablo, because I couldn't remember exactly what the number was. So,
It's what I do, Greg.
so I started to try to connect the dots. Right now, home prices in Jacksonville are about 360,000. And so if you can use this information to your advantage, if you happen to wait a year from now, if you're somebody and you're like, well, I do want to invest, but all the noise, all the headlines are saying I should wait. I know about elections and I think that waiting is a good idea. Here's what it's costing you. If you wait 1 year from now to buy your Jacksonville rental property and it appreciates 7.8%, the new purchase price will be $388,000. And so not only will you now have to pay $28,000 more for the same property, but you're also giving up $28,000 worth of equity that could have been a big step forward for your financial future. And in addition to that, we're not even talking about the other profit centers like net rental income, principal pay down, tax savings, and then inflation hedging and inflation profiting, which adds up to thousands of dollars more. So that's the big takeaway here is there is a real opportunity cost for following the herd, or doing what average investors do right now, especially when it comes to real estate. They tend to sit on the sidelines. This information, what you've seen now for however many, let's see, we had 10 elections we just looked at. We looked at the US, we looked at Jacksonville overall. The chances that this one is an outlier, relatively small. In fact, there's a lot of information and data to support potentially an even bigger bump to home prices than we've seen in the past. So use this information wisely. Don't sit on the sidelines. If it's something that you know, real estate, it's right for you, now's a good time to invest.
Yeah, well said, man. And you haven't even mentioned the fact that the incentive is also in place, right? So, like, again, to recap, right? Purpose of the show today is to pierce through the noise and the anxiety and the fear and give data with perspective. The data and the perspective show that real estate market does well in election years. It has an average of 7.8% appreciation. We're not saying that that is what you're going to expect this year. We're saying that generally elections don't affect the real estate market in a way that makes it not a reason to invest. So all we're doing is dispelling the idea that if you are in a buying cycle, you believe what we believe, that we want to build an army of rental income properties and like retire differently than everybody else. And what's giving you the yips is the fact that we are in this like really funky looking election and the world seems to be burning around us. We have the data to support that real estate is going to do what real estate do while the rest of the world is doing what it's doing. And the very real cost of inaction of being like, doing what I did in 2014 for somebody who's going to say, I'm going to give it off a year is essentially a $56,000 swing of in equity because you lose the 28 that you would have gotten, plus you're paying an extra 28 in purchase price. And the other argument would be, well, I want tomorrow's interest rate. Right now, JWB is offering tomorrow's interest rate today, plus an extra 15 G's to add to that swing. If that's where you're at, like get out of paralysis mode, go to chatwithjwb.com, book a call or send an info at jwbcompanies.com